Hi, welcome back to the channel. Today we're going to talk about 3 different tax credits, what they are, who they're for, and how to calculate them. Let's get started. So the first of these non-refundable tax credits we're going to talk about is the personal amount. We're going to start with the personal amount because it's the only one of these 3 that is not age restricted. It applies to absolutely everybody right when you start making income all the way through into your retirement. The basic personal amount is $15,705. However, if you have income over $173,205, there is an unnecessarily complicated calculation to figure out how much your personal amount is. So let's start by jumping into that calculation. So like I mentioned, for anyone who has income under $173,205, the personal amount is $15,705. But for those of you that have income above, there is this calculation, which like I mentioned before, I find unnecessarily complicated. Let's go through it. So step 1 is that your base amount shifts down from $15,705 to $14,156. Then you take your estimated net income, which we're going to call A. You subtract the threshold of 173 to find B. You then take this arbitrary number, 73,547, and you subtract B from there to find C. You then divide C by 73,547 to find D. And then you multiply D by 1549 to find E, and then you add E to the new base personal amount to find your personal amount. This is obviously the easiest way CRA could have figured this number out. I have no idea why they made it so complicated, but this is the case. One thing you may notice or have realized here is it's entirely possible that D eventually will become a negative number. And in fact, it's around $250,000 of income that it does, meaning that when you're adding the eventual outcome of this calculation to the personal amount, you're actually going to start dropping that personal amount down. So let's look at an example. If you were making $220,000 per year, that's your net income on your tax return, minus the threshold of 173 brings you to $46,700. Subtract that number from 73,000, then divide it by that same number. Again, I don't know why it's this complicated, but it is. We end up at 36 cents. You multiply that by 1549 to get 563. That's added to your new base amount of 14,000, meaning that if your personal income is 220,000, your personal amount or this tax credit is 14,719, not the 15,705. And if you continue all the way to about $900,000 of income, this is where the personal amount starts to essentially get wiped out. So for the very few of you out there that are making $1 million plus, you will not get this tax credit because of this calculation. Tax credit number 2 we're going to talk about is by far the easiest to calculate because there's no formula to it at all. It's the pension income amount, and it's $2,000 as long as you are 65 or older. Now, that's per person, meaning that a couple gets $4,000, whereas an individual gets $2,000. And a little bit later, I'm going to compare these 3 tax credits in a couple versus a single scenario. And you can see another example of what I was talking about a few weeks ago and how our tax system is very lopsided towards couples, but we'll get to that later. Tax credit number 3 that I'm going to talk about is the age credit. Now, the age amount credit, which is what it's actually called, applies only if you're 65. And 65, by the way, means that you turn 65 as of December 31st of this year, meaning that you were born in 1959 or earlier. And the age amount is at maximum $8,790 per year. But if you're in an income threshold of $44,325 through $102,925, you will have a reduced version of the age amount. And if you're over that $102,000 number, you will not get the age amount tax credit. So once again, let's jump into the software and figure out how much you'll actually get if you're in between that threshold. So the age amount, like I mentioned before, if you're under $44,325 of income, is the maximum, which is $8,790. Now, just to be clear, your net income is line 23,600 on your tax return. That's where you're going to want to look to figure out what this number is. Now, if you're in between that 44,000 and the 102,000 threshold, this is the calculation that you need to follow. It's not nearly as complicated as the personal amount. It's plenty complicated, but it's not as complicated as that. We take your net income from line 23,600, and we're going to call that A. You subtract the bottom of the income threshold, $44,325, to find B. You multiply B by 15% to find C, and you subtract C from 8790 to find your age amount. So let's look at an example here. What if I was making $80,000? So you're over 65, just a reminder here, you make $80,000, you subtract $44,325 from that to get $35,675. Multiply that by 15% to get $5,300 and change, and then you subtract that number from 8790 to have an age amount credit of $3,438.75. So you can probably start to see here another way that I'm going to show that our tax system is a little bit lopsided, or a lot lopsided, towards couples over single individuals. So let's look at that comparison in the next tab. All right, so you're going to see an example here where I have an individual making $80,000 and I have a couple that perfectly income splits that 80 into 40 and 40. And I'm just, again, isolating these three non-refundable tax credits. The single person, because their income is under $173,000, is going to get the full personal amount. This person is over 65, so they're going to get the full pension income amount. But in the example I just ran on the previous tab, they're only going to be getting $3,438.75 of the age amount, not the full $87.90, meaning that their total tax credits between these three is $21,143.75. Whereas the couple who perfectly income splits that 40 and 40 has 2 times the personal amount, $15,705 twice. 2 times the pension income amount, $2,000 twice. And because the income split, their income is below the $43,000 threshold, meaning that they get the full age amount of $8,790 twice. Which means an individual making 80 grand will get 21,000 between these 3 credits, whereas a couple pulling the same amount, exact same amount of gross income, will get $52,990 of tax credits between these 3 tax credits. So if you learned anything today or have any other questions, please leave a comment or a thumbs up below. If it's time for me to start reviewing your financial plan, there will be a link in the description down below that will come directly to me. Until next time, keep planning.